Hello, Tim Moffat here. I'm the portfolio manager for the 18.6 strategic investment portfolio. We're recording this at the latter stages of March, the end of the first quarter, 2024. Still a couple of days left, but barring anything changing significantly, we're just going to give a little bit of an update on how the year's progressing to date in the markets globally and inside the portfolio. So far this year, really, the market has just continued to climb the wall of worry. It hasn't been a huge amount of volatility. It's really just ground higher broadly. The MSCI, which is very heavily influenced by the top heavy tech stocks, which have been really the spear point of the market rally since October 2023, has performed very strongly. It's looking like it's going to close the quarter around about 7 to 8% up over the last 3 months. The Aussie market hasn't quite been able to keep up with that, but despite this, the 18.6 strategic portfolio is looking like it's going to finish at or around about the same sort of 7 to 8% positive for the quarter mark, which we're very happy about. Best performers inside of the portfolio in the March quarter so far, Austin Engineering has certainly led the charge. That's up nearly 50% so far this quarter. It's had a very good earnings guidance upgrade. The markets like that. Mining services broadly have been reasonably firm, so we think that's at the moment looking like the right stock in the right sector. Wesfarmers reported in February they had a very strong half, which was actually spearheaded by Kmart. Usually it's the Bunnings business which provides tailwinds for Wesfarmers, but interestingly Kmart, which is more, I guess, discretionary facing, performed very strong. And we also have had a couple of takeovers this quarter in the portfolio. So Seven has tried to make a tilt to buy up the remaining shares in Boral that it doesn't already own, which caused the Boral share price to rise. Interestingly, there's going to be, by the looks of it, no more building materials businesses left on the ASX. We've also seen bids from CSR and ABC, the old Adelaide Brighton Cement. And if those two both proceed, then including Boral, then really you've only got Brickworks left, which is not really a pure play building materials. It's a bit more of a conglomerate. So it's certainly been a strong sector. And we also had a takeover from Virgin, which is a UK bank. They were up about 35% this quarter on a takeover. We haven't exited that at this point because the stock's trading, or the takeover bids, at about 65% of NTA, which we think leaves potential scope for someone else to come along and have a look at it. The worst performers in the portfolio have been effectively all in the same sector, which is gold. The underlying gold price has actually been quite firm in the quarter. It's broken into new highs again, but that hasn't translated into a strong gold sector from a share market or equity perspective. A lot of the sector's being troubled by cost inflation and staff issues, which has meant that the earnings tailwind from a higher gold price hasn't necessarily been flowing through to earnings. We have moved around and made a few small changes in terms of our gold exposure. We do like the sector, but we've moved some holding positions around and trying with a focus on trying to own the stronger names in that space. We've also added some Sandfire, which is in the copper sector during the quarter. That's performed quite well. Champion Iron added to our realestate.com position, and some discretionary super cheap auto has been added in there as well. Discretionary sector has been reasonably firmly bid, which is, I think, symptomatic of what we would expect to be seeing in this stage of the cycle. We also exited Seven Group, and they performed very strongly over the last 6 to 9 months. We think them making a scrip takeover bid for Boral is a pretty good indication that the Seven board thinks that their share price is pretty fully valued. And like I said, we've exited Boral after the takeover and rotated around some of the gold stocks. So it looks like, I mean, the roadmap for the next 2 years, we still expect at this point to see broadly higher markets. through 24, 25, and at this point likely into 26. So if you're interested in investing with us to take advantage of the next few years in the cycle, please contact.